Welcome back. You're watching Big Deal, and we are in conversation with Niren Shah of Norwest Venture Partners. Niren, we were talking about one of the important themes that you have already invested in, and the companies are ripe, which is the financial services space. Now, there are many other sectors that you have made investments in. At the moment, when $3 billion have been raised, you may have more ammo at the moment and more destinations to look at. Are there any new themes that you are picking up for future potential? And amongst the usual themes, what are you most optimistic about?
So even within financials, I think we're focusing a lot more on fintech.
Yes.
So that is one area where we're doing a lot more and doing, doing more work. I think that one of the areas we want to double, or two of the areas we want to double down, is on consumer and healthcare.
Right.
We've had some good investments in the past, and we've also sort of had some good exits there. But consumer, we're just seeing that just the level of growth in the Indian ecosystem.
Yes.
And we're looking at, there are different segments. There is the mass market, there is the sort of mid, mass premium market,
Yes.
and then there's of course the luxury in the premium market. But these are doing really very well, and,
Yes.
and across the board we're sort of starting to see that it's coming of age. We also think that when a country, it's a certain GDP per capita, that really takes off. So we've done quite a few deals, but we want to do a lot more over there. In addition to that, I think one of the things which is very close to my heart is healthcare.
Yeah.
I think that it's really something which we feel is going to drive the country with so many people. Just healthcare delivery, healthcare tech, or those are things which we are very focused on. So
Yes.
you'll start seeing, again, we've done a few investments in the past,
Yes.
but you'll start seeing us doing a lot more investments in these spaces as well. The last one is, we're looking at manufacturing and China Plus One as a theme. We're starting to see that because of the amazing work done by the government,
Yes.
this is really being seen as a destination in India. India is becoming a destination for global manufacturing. So I think we're at the tip of the iceberg. It's just the beginning.
Yes.
So this is going to be a very long runway for like next 20 years. And so we want to get in early here and sort of try and invest in companies
Yes.
which are sort of, manufacturing for the world.
Right. So manufacturing for the world, yes, that theme has picked up. And recently I heard another theme, that work from India. So that's also picking up. So there is a lot of exuberance, there's a lot of confidence, and private equity and VC money is very, very critical for our for fueling our growth as well. So Niren, when we talk about investments in India, a lot of that is motivated by the kind of exits and returns that you've made. What are your top picks in terms of exits that you've made in India and your experience there?
So we've had a pretty strong exit pipeline, and a lot of those exits have come from two areas. Either it's been going public, IPOs, or it's been through secondary sales, right? So, Persistent Systems, Thyrocare, RBL Bank, Snowman, Yatra, 5-Star, we've done sort of IPOs.
Yes.
And in terms of secondary sales, companies like, of course, NSE, where we had a large position, we've sold secondary there. Zenoti, Capillary, we've sold a lot of companies also in terms of that.
Yes.
We also had initially invested in a couple of banks.
Yes.
And some of those we also exited through the market.
Yeah.
I mean, like IndusInd Bank, Kotak Bank, Shriram City Union.
Yes.
So we've had a lot of exits, I think more than about 25 exits. We've been quite blessed in
Yes.
that regard. And that spurs us on. So, we've
Yes.
been looking at each of these verticals and saying, okay, can we exit some of the financials? Can we exit some of the sort of SaaS and others? Can we exit consumer tech? And once you sort of proving that, look, in this country, we can do that, right?
Yes.
And once you've done that, we've sort of doubled down on those sectors. So that's been the thesis. And you're absolutely right that, exits is something which is very critical.
Yes.
India is going to have to give a lot more exits, right, for that deal flow to come in, for that, sort of massive inflow to come in.
Yes.
And, we've been very focused and blessed in that regard.
So, Niren, of course, the private equity got a lot of confidence because of the last year's block deals and the exit mechanism on the exchanges.
Right.
Of course, VC community got the confidence because after several years of investing, finally the IPO market had opened a few years back. But you made a mention of the mergers and acquisitions, the big ones. India doesn't see much big M&A. What do you mean by that, and what are the solutions?
So as I was saying earlier that, look, I think in the US, when you look at the venture market and the early stage market, what happens is some of these are technology-driven things, right? And what happens is somebody, it could be a Cisco, it could be a Microsoft, it could be a Google, comes and picks up these companies for 3 billion, 2 billion, 5 billion,
Yes.
right? And you don't see that much of that in India.
Yes.
So about 6-7 years ago, we pivoted our strategy saying that, look, M&As will come to India, but they will take a little bit of time. We have to ensure that at least between an IPO and secondary sales, you get enough exits. Companies need to get these exits.
Yes.
And I think that while the M&A market deepens, in the meanwhile, I think we need to focus, and everyone is focusing a lot more on the IPOs and the secondary sales, right? So secondaries to other funds, to sponsors, to secondary funds, that has become a meaningful avenue of exits as well. And the reason for some of this is just that the market hasn't developed. Local sort of strategics buying a lot more, global strategics coming in. I think that market will evolve, but it'll probably take another 5 years.
But you have also pivoted to another stage of investment, the growth stage.
Right.
So are you accounting for a large part of your exits through the IPO mechanism, the foreseeable future? Then?
We are. In fact, that's very central to our strategy. So we are looking at, if you look at all our companies today, we said there are 19 of them which are profitable, right? I would expect that close to 15 of them might actually look at, filing in the next 3 years. So that is actually the hallmark of our new strategy, which is what we call NVP India 2.0.
Yes.
Since about 6-7 years, we said that, look, M&A exits are hard to come by, and therefore we're focusing a lot more on late-stage venture companies which can go IPO, or growth equity companies which can go IPO. And look, the Indian IPO markets, they're doing pretty well, because we think given this is such a nice time for India, the next 20 years, right? And of course, there will be things which go backward also, but largely it's such a vibrant time for India. We expect that the IPO markets will more or less be more open than closed. Right? So we are actually quite positive on that, and that's sort of the cornerstone of our current strategy.
The equity market's doing so well, and the IPO market also booming has become one of the constraints for the deal street as well. And the kind of discrepancy that we have seen in the private market and public market valuations had really halted a lot of conversions when it came to deal making. So that's one of the also big reasons. But how do you see the venture capital world from your point of view right now, with some of the changes, interest rate cycle turning? That particular milestone has been pushed. The wishful thinking probably at this point is just not coming true. That, along with the liquidity coming in from the US especially, and at the present moment, the private market scenario. How do you see the venture capital, industry and the fundraising ability of the startups?
It's a really good question. I think that if you look at the long run, right, India, and given sort of the government's push also, right, this is going to be the startup capital of the world long term, right? Now, when you look at 2021, there was a big bubble. And we are still dealing with the outcome of that bubble. There is some moderation happening in the valuations. Globally, interest rates have gone up. So it has sucked out the capital. And I think what's happened is, while the very early stage is continuing to flow, I think when you look at companies which are above $1 billion, it's been a little more difficult to get funding.
Yes.
A lot of the crossover funds, hedge funds, they've sort of not been operating. Yes. So that's also taken away a little bit of the oxygen. I think as the interest rates start going to decline, start declining from maybe 8-9 months out, globally and probably in India as well, I think you'll see some of that resurgence. But I still sense that the same level of valuation may not come back, which you saw in this bubble period of 2021. So it's an industry which is sort of regrouping. I think it's moving. You're starting to see some green shoots. I think over the next 6 months, you'll see some very solid green shoots.
All right. So in a short period of time, some solid green shoots are going to be visible. But of course, there are many macro factors that are really defining it. Niren Shah, always a pleasure to welcome you on CNBC-TV18 and have your views on your portfolio companies, India theme, as well as the investment strategy. Thank you so much for joining us here.
Thank you for having me.
Thank you. And with that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in, and keep it with CNBC-TV18.